Hey everybody, good afternoon. Welcome to 12-Minute Trading. My name's Doc Severson. I'm joined here with Dave Lukas. Today is the first day of the second half of the year. We're into the third quarter now. It is the 1st of July. So actually we had a really good first half of the year. It was surprisingly good considering how strong the market was back in the very end of 2023, the last quarter. So that carried over pretty well into a very nice first half. I tell you what, though, Dave, I'm sure you're going to echo this. We're probably going to have a lot of volatility as we get into the second half of the year.
Yeah, well, I mean, we've got a lot going on in the second half of the year. I think so first and foremost, and you'll bring this up, we've got a situation where we've got a weekly chart that's into exhaustion, but it's starting to charge back up. 3 weeks of going nowhere. That'll do that, right? You've got a daily chart that's fully charged, right? So I thought coming into this week, low volume week, like 3.5 days of trading for the entire week, multiple Fed speakers, the Fed minutes, jobs data on Friday when nobody's going to be around, and you got the algos pretty much trading. If there's ever a week to get like a nasty downside corrective move that comes out of nowhere, it's this week, right? Now, today we started out that way, and it looked like we were going that way. What changed it? The Supreme Court came out and sided with Trump in his case for the presidential immunity, and he won that case. And that pretty much torpedoes the January 6th prosecution stuff that they wanted to do to Trump. And then, and like him or hate him, the market is pricing in a Trump win right now. If you look at all the market makers and all that, they're pricing in a Trump win. That is positive for stocks. Stocks, that's obviously more pro business, less regulation, blah, 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 right? And so we saw that, and about as soon as that ruling came in, the market turned and went the other way. So will that last for today? I don't know where we'll end, right? I don't know if we'll end down or not, but it may just be a one-day thing, and by the end of the week, we see some nasty downside move. I wouldn't be surprised to see the market down 2% this week. You know, we've been hearing, hey, we've never had a 2% day or whatever it is, a 2% move in like however many months or whatever that is. We may see that this week. Could happen by, with anything, just with the low volume that we have. So that's where we're at with that, right? So I had said to my students 2 weeks ago, expect the last week and the beginning of July to be volatile. We're seeing that. We're seeing 1% moves up and down, not really going anywhere at the end of the day. But some big movement. We've got that in play. That's going to last a little longer. We've got to get the weekly charge back up. Fastest way to do that is to go lower. So, and that daily energy, a quick 2% move lower would charge up that weekly chart pretty well. And then that would get things going again. It's a little weird this year, though. Usually these summer moves start like, second week of June and really go through most of July. And then they start to peter out into August, like mid-August. And then you really get some nasty movement, downward, typically volatile into September and in October. We seem a little bit early on that right now. So we actually get a move down and then have a really good rally through the end of July and August, maybe even into September. And then the big wild card now is what happens with Biden, right? Everybody saw the debate. Regardless of your feelings politically, it's painful to watch your president like that. And the world saw it too. And so now it becomes what uncertainty comes in, right? Do they replace him? Who do they replace him with? What does that mean? So that's the type of stuff that the market can't price in yet. And so you see that type of, event, something like that, changes things with markets. So we'll just have to see. So yes, long story short, intermediate term volatility, probably followed by some good movement, positive and a nice trend, then more volatility, then after the election certainty, and markets rally into the end of the year. That's kind of the path we're following. So
I'm gonna jump over here I'm gonna jump over here to the charts and take a peek here. So what Dave was talking about is, again, this has been a very strong move since October of 2022 is actually when this started. Mm-hmm. So we've gone from 3,500 up to 5,500. We've gone through 2,000 S&P points during that time, which is kind of amazing that we've gone that far. But, everything comes at a cost because we can't just continue to trend in perpetuity without some type of recharging action. You got to go through it. You got to rotate through a different set of buyers, and there's got to be new, fresh buyers to come in and willing to take the price higher. So what we're looking at here, if we look at the various time frames here, we have the monthly chart, weekly chart, and then eventually the daily chart on the right-hand side here. And so as we look at things, we have basically a family of time frames. We have trend going to the upside in all different time frames here. So keep in mind that based on rule number 1 of fractal energy, that this will not just immediately turn around. Unless we have another 9/11 or something like that, this will not just immediately turn around. So people misread this all the time because the first red candle that always shows up, people panic and figure that, okay, this is the end. This is the beginning. It's kind of like Red Fox, in Sanford and Son. Oh, this is the big one. It's not. It takes a long time for these things. In naval speak, this is called the Williamson turn. Trying to turn an aircraft carrier around takes miles and miles of real estate, even at flank speed. If turn that thing around in place, right? So it takes a long time. So range expansion will lead to range contraction before this thing turns. Now, but that doesn't mean it's going to continue to go higher forever. So what we have here is we have a small little range. And actually, this is fairly bullish, but that's a lot of energy. And this can go in either direction right now. It can continue to go higher, but the parent time frame is saying, you know what, I really need a break here. So this is why Dave and I are wondering if we're going to see a little bit of a gap fill down here over the course of the next week. I mean, it could happen. We don't know which way the price, we're not here to predict which way the price is going to go. We're just here to be ready in case it goes one of these directions. So this is why we set up these Darvas boxes and understand if it breaks through here, then this will be something to notice. Now, Friday was a kind of a nasty reversal candle with a higher high and a much lower close. But so far,
and a double top as well too.
Yeah. Yep. So double top, and we're seeing the same thing on the NASDAQ as well too. So this is something to keep in mind, although we've been seeing these types of signals for quite some time. Notice how long it took for this thing to shake and bake. It took a month and a half before this thing released to the downside. We could be going through another one of these things where we just beat up people on both sides of the ledger until this thing pulls back and we get some rotation. Where's the rotation going to go? More than likely into things like, the Dow stocks. Are we going to have our energy? Are we going to have financials rally into the end of the year? And remember, it's not going to be the day after the election. It's going to rally 6 months before that election if the market prices that in. So we're looking for rotation into the Dow at some point. If we see a move above 39.5, it's likely happening. Especially if it gets above 40, we're probably in the midst of a strong trend by then. So
right now the keys are, though, with the daily energy where it's at, it's going to be hard to really move higher in earnest and hold it. The easiest path is to go down to charge up the weekly and get it going again.
Right.
So that it's just any upside I would see muted. We may get just like we saw Friday. We tried to push higher, and it looked like we were rocking. The NDX cleared 20,000 again. It was up over 200 points, and then gave it all back. And put that double top in, and that's what you see. When you've got an exhausted larger time frame, when the smaller time frame's trying to go, and it's just like, sorry, kid, you got Gotta stick here. It's like, the dog on the leash tries to run after the squirrel and you hold the leash. It has that initial pop, but then it comes back because you won't let it go. It's kind of the same thing.
Yeah. By the way, if there's any questions today, if there's any topics you guys want us to cover while we're here, we'll be here for another few minutes. So just, go ahead and shout out, raise your hand, chat it into the chat room. Or if you're watching this on a replay, which is probably most of you, feel free to email us and let us know if there's a topic that you want us to tackle. the next time that we do this. So remember, this is going to be kind of a funky week because, like Dave said, 3.5 days of trading. So we have Monday, Tuesday, half a day on Wednesday, and then Friday. But, who's going to be around on Friday? Friday's going to be another swivel chair day where people are just going to put their positions on swivel chair and they're going to be gone, or more likely they're going to be doing them from their, Verbo somewhere. So it's, it's
going to be mostly algorithmic trading, I
Yeah.
imagine, and it's going to key off that jobs print. So
That's true. Friday's
that's
the
why
jobs.
low volume weeks like this are just prone to bigger moves. Either way, because just it's all computer trading for the most part.
Something I want to bring up.
That's something to expect.
Something I want to bring up to you guys while we are here is, let's see if I can get a good view of this thing here. Something that we're going to be talking about in the near future is going to be using what we do with fractal energy, but automating the decisions. Mm-hmm. And so the two-pane strategy that we have, I should bring up the picture of T-Pain because I always use that big grinning face of T-Pain on there. But the two-pane.
What's your prediction? Pain.
Yeah, so we have the daily chart over here and we have an hourly chart over here. And what we're doing is we're using the daily chart. We're trading in the direction of this trend. So all we're doing is trying to identify underlying stocks with a defined trend. And if that trend is above the 21-day moving average, I mean, look at this. Back in 2023, that was amazing. Every test of the EMA 21 was until it fell below it. And then once it falls below it, we bury it. And then we wait for the price to come back again. And then we're looking for signals. And then on the signals, what we're looking for is we got a study which is called the RSI in Laguerre time. So most studies are based on a linear time basis. So you'll see things like, 14 period or 9 period or 7 period, things like that. That means that there is, for that period of time, what you're looking for is specific linear days to go by, or it could be minutes or it could be hours or whatever your time frame is, like this. So that's linear time. Now the Laguerre study is a Laguerre time transform. So what it does is it's going to, I don't know exactly how it works. I tried for years to Google things and try to understand it better, but it's one of these things that requires differential equations, and I did not do very well at that in school. So I just sort of blanked out and I said, all right, I'll just use it. And so what it does is it's a very quick oscillator. What we're looking for is the price to hook up from oversold conditions, and it's very quick to identify those oversold conditions. So if we have the trend going in this direction, then we're going to hand the logic over to this chart over here and say, tell us every time that the price hooks up or the oscillator hooks up from oversold, and we're going to take a long entry. Now, these are not long entries where we're going to stay in for weeks and weeks at a time, although you could expand the time frame out here. You could use something like a weekly chart over here and a daily over here, and you can, look for swings in that. But in this case, we're just looking for a little swing. Like this is a perfect one here. And as of this morning, we were showing potentially this one was getting ready to fire and has sort of pulled back from there. So we're not going to enter anything. You can also wait for like end of day, things like that. But these types of swings where the price is going from, in this case, like 545 up to 550, that's a 50-point swing on the S&Ps. That's more than enough to fire off a 50% return on these vertical spreads. So we're going to be looking for, it's a very accurate way to trade because you're getting everything lined up. It's almost like if you're shooting a rifle, right? If you're shooting a rifle, what you do is you get everything lined up on your sights, right? So you've got your front sight, And then what you're going to do is you're going to line up your rear sight so that it fits right in there. And then boom, you've got everything lined up. We're doing kind of the same thing with this, is that we're getting everything lined up. And when everything lines up, boom, we go. And we can actually get to the point where it can email us and let us know to get in. Now, we could take it one step further and have it trade for us, but we choose not to do that. I like to have that one last bit of discretion, if you will, right before we do anything like that. I like to look at these and say, oh, I don't like this because this one's been going on for too long. But most of the time, I'm just taking these trades as is when they come. So this will be something that we're going to be talking about more about in the next probably 3 to 4 weeks or so, as we integrate this more into our fund trading and everything else that we're doing. So this is going to be a very choppy directional market.
How many would that be? Yeah, how much would that be interested if we created, based off like what Doc just showed, a signal indicator that sent you a text and email every time that situation happened and the symbol for it, and basically showed you the rules, and this, you just acted on it like that? How many of you guys would take advantage of something like that? Right? You can post it in the chat or send us a note of support at 12-minute trading, but we're experimenting with it, and it's pretty dead on, which is nice. This is actually a little different than selling options. You can buy options with this. In fact, we're experimenting with buying just short, or not short, but just buying call spreads against it. Just small little, 2 wide call spreads, and then getting 50% return on risk and out, 50% return on risk and out. So far, it's pretty good. So, if that has an interest of you, we're thinking about going down the path of making it a solution that we offer, and minimal dollar type thing, to where it just alerts you every time that situation happens with the symbol. So send us your feedback. We'd love to learn more about what you're thinking on that. That would be of interest to you. So cool.
Okay.
Let's see, Doc. I'm trying to think if there's any other things in the charts to look at today that is worthwhile for these guys. You know what? Pull the NDX back up again. Let's talk a little bit about that.
Well, I can do that. Let's. Do you want the fractal display?
Yeah, show the fractals.
Okay. There we go.
Because this whole thing, rally wise, has really been led by tech, right? So, and you can see it very similar to what is on the SPX. You've got a very exhausted monthly chart. You've got an exhausted weekly chart, although 3 weeks of going nowhere, starting to charge back up. And you got a fully charged daily chart, right? So, and you got a double top on that daily chart up there. So on this chart, typically on the daily chart, it's very easy to come down to the moving average for the daily chart. So that would be the first target. If we're going to pull back, that's like 19,400. But even more importantly, the NDX weekly chart, that moving average that's in the middle of the weekly chart, has been the level of support in bull markets. You can go back to 2021. You can look at this bull move. In fact, if you do look at this, bull move that started in October, look at where it, crosses over right there. You can see it back in October. See where it crosses over that moving average on the weekly chart. So yeah, you got to go weekly, Doc. And so you can see it right there. See where it crossed over? And then look how that level has been the support level effectively ever since. See that crossover in October? And then bam, that moving average has been just the support level. So typically we will see it a lot of times come down to there. Guys, that's 18,463. So that is over 1,000 points lower if it wanted to do that. And that would be actually a very normal pullback. If you look back at the pullback, the last time we came down to there, we were at what, 18,400-ish, and we pulled back down to 17,100 range. So that last little pullback that you see right there, when was that? That would look like it was about March, April timeframe. So don't be surprised if that happens here with the exhaustion. Okay. So and that was the finishing bit to charge it back up. So as Doc kind of said, we go sideways for a while, and then you get that move down to finish the charge, and then you get going again. So I guess what I'm saying is don't be lulled asleep by this market, especially if you're short-term trading, because that move can come out of nowhere at these levels at any time, and you just got to be prepared for it. So that's one of the things. And I cite the NDX because of the fact that tech is led. And I think I saw earlier, it may be up now, but NVDA was down $4 or $5 today. And so now it's back up. So right now, like 123-ish, this range has been support level. So if NVDA breaks out, and on the weekly chart for NVDA, it's exhausted too. It's at like 28 for the energy. So if this thing, we talked last week, I think we both said coming down to about 100 would be a really normal thing on a chart like this for where that gap is and where the moving average is to charge us back up. So, I guess I'm saying watch these big boys, watch this bellwethers like the NVDAs. If they start heading down towards that moving average, the NASDAQ's going to go with it, the rest of the market's going to go with it. That's kind of your sign that we are doing that. And then watch that moving average, because if it really breaks and doesn't hold, then we're moving into something else. And we need to be, and that's maybe where that monthly time frame comes into play. And it could be accompanied by some significant event. I saw over the weekend that all of our European military bases went to what's called Charlie level alert, which is imminent terrorist attack, right? That doesn't happen very often. In fact, it's been years, I think, since that's happened. And so, who knows, right? China moves on Taiwan, things like that happen. But those are the type of levels to watch for. If you're just watching the overall market to see if we get a change in character at all. Not saying it's going to happen. We're clearly in a bull market, but, markets change most of the time when things come up that are not priced in and that are bigger events that have a lasting effect,
So one of the things that I've sort of had to force myself to learn over the years has been patience. Now, you always hear about, you got to be patient. You got to wait for the trades to come to you. But here's a good example of this is that I am willing to wait for NVIDIA to get down to about the $100 level. Most people are not. They see something running away. And this was me, 10, 15, 20 years ago, would chase after these things, but no longer. Because when you get these things to work out for you, when you're patient enough to wait for the trade to come back to you, then it's sort of a light bulb goes off. And all of a sudden, everything starts to make sense again. Because if you wait for the price to come down on NVIDIA to 100, guess what? Nobody else is going. You're going to be in a room by yourself. You're going to be the only person buying NVIDIA on that dip. And what we typically will look for on something like this is we'll go out to the option chain. We don't just buy it. What we do is we try to put the odds in our favor. Now, right now with the price at 124, if we were to sell the at-the-money option right now, look at that, we would be paid almost $800 to hold this to August. And what we're doing is we're committing to buy at 124, and we're being paid. I don't know what the math is on this. If we divide, let's just say 800 divided by 184 or 124. So that would be 12,400.
About 6%.
Yeah, 6.5% right there. So you'd make 6.5% over the next 46 days, irrespective of whether you get assigned the stock or not. So what we're going to do is, if the price were to come down to 100, we'd probably see the implied volatility on here shoot up to something ridiculous. Right now it's at 50%, which is big. And so
you'd probably be like at $10.
Oh yeah, easily,
the money.
easily. So if we're down here taking an assignment, like right now, you can get a 1% return by selling the $100 put. But that's a scared way to trade these things. I would wait till the price got down to this level, and I'd probably stand right in front of this thing and sell right at the money. Because again, This strategy depends on whether or not you want to be assigned. If you want to be assigned, all of a sudden that opens up and that liberates you from having to be right. Because
let's run another scenario with that though. Go back to that. Let's just sim something real quick. Not necessarily the charts. Let's just think it through. So if you go back to the options chains, let's just say that it came down to 100. So if you pull up the options chains again, let's just look at this real quick. So let's say, that it came down to 100 and we were able to get the $100 put to August. Let's say it happened this week and we're able to get the $100 put and get paid $10, right? That makes our break even $90, right? You guys follow me on that? 100 minus the $10 we got. So go to the 90 strike, Doc. What's that cost right now?
40 cents.
40 cents. So here's a version of the wheel strategy you can do when this happens, right? So it won't be 90, it won't be 40 cents then, but maybe it's at that point, maybe it's
well, let's take
what's 10 points out of the
$10
money right now.
Right now would be about $3.70.
$3, right? So what you can do is you can effectively buy yourself insurance. So you can sell the 100, get paid $10, turn around, and not even that. You can buy like a 10 wide put spread from 90 to 80, which will probably cost you a buck at that point, $1.50, and buy yourself insurance so that if the stock drops to 80, you're covered. Now you could just buy a straight up put for like $3, right? Maybe that's a little more than you want to spend though of the credit you got, right? But you're at that point you're effectively infinitely protected lower because it can go to zero and you're good. But that's a wheel. That's the wheel strategy, and that's a great. It's probably one of the safest option strategies you can do because of that way of protecting yourself that way, whether it's with a put spread or just buying a put.
Yeah,
I do that with covered calls on a weekly basis. I do it on stocks like Tesla, AMD, MU. And so what I do is every week, based on which ones have pulled back to like the lower Bollinger Band or are close to it, buy, however many shares and then turn around and sell the at the for the next week. And then I take a portion of that credit and then I look at the expected move and I buy a put spread or put that basically protects me for the expected move for the next 5 trading days effectively. And just do that every week, and the worst that happens is I own the stock and I can continue selling calls and I can sell down on it. Tesla's been really fun lately because it's gone nuts to the upside. It's outside the upper Bollinger Band. It's probably due for a pullback, but I just keep rolling my call in it and collecting money and reducing my cost basis because my call is still worth some. It's not worth as much as I normally get, but I'm just reducing that cost basis. My cost basis on Tesla is now like in the 150s. So the stock could drop in the 150s now and I'm still making money. And that's just after doing that for a number of weeks and stuff. So, not a bad thing to take if you got a portion of your portfolio sitting there, you're trying to do something safer with it that you maybe don't want to put at so much risk that, you can do. So another thought for you.
Cool. Yeah. I love the wheel strategy because it's the first one that most people learn. The first strategy most people trade with options is buying long calls. And then they say, boy, this is really hard because they're trying to do a synthetic long stock replacement. And it's difficult because it's supposed to be difficult. And then once you learn how to put the odds in your favor by selling to open the position, everything changed for me as well as just about everybody I've ever worked with on this, learning how to win and learning how to manage risk at the same time. So guys, we are out of time for today. So I want to thank everybody for joining us here today, whether you're live or whether you're watching this on a replay. Always something interesting going on in the market. Please let us know what you'd like us to see talk about. You're going to hear a little bit more about this two-pane fractal thing that we're talking about today because of its accuracy. And I think it's going to be a very choppy market into the end of the year with a general trend to it, but I think it's going to be a stock picker's market. So it does help to have some kind of logic behind everything. So, Dave, any final words?
No, I mean, just low volume week. So be ready for some bigger volatility and don't be surprised if you get a 1 day wonder big move down or something. Friday should be interesting. So, but other than that, have a wonderful 4th of July. And, we are so blessed to be in the country that we're in and be able to do the things we do and do this like with you guys each and every week and have all the opportunities that we have. We sometimes take that for granted. So, take a minute to celebrate the 4th of July and the creation of what I believe is the greatest country ever founded. Just enjoy the day with your families.
All right. Thanks, everybody. You guys take care. We'll see you next Monday. Adios.